For decades, the narrative of global economic growth was dominated by China, its rise as the world's factory reshaping geopolitical and commercial landscapes. Now, a new contender is rapidly emerging, poised to challenge and redefine that narrative: India. With a burgeoning population and ambitious economic reforms, analysts and investors are increasingly looking to India as the next engine of global growth. The question is not if India will grow, but how quickly, and what its ascent will mean for the global order. A cornerstone of India's economic potential lies in its unparalleled demographic advantage. In 2023, India officially surpassed China to become the world's most populous nation. More critically, its population profile is remarkably young. Data indicates India's median age stands at just 28, making it the youngest workforce in the G20. This demographic dividend projects a significant boost to its labor force, with an estimated 900 million working-age people by 2030, a direct contrast to many aging developed economies. This demographic reality presents a stark contrast to China's trajectory. While China's economic boom was fueled by its own vast and youthful labor force, its median age has now risen to 39. This aging population is projected to shrink China's workforce, posing long-term challenges for its growth model. India, conversely, continues to add approximately 12 million people to its workforce annually, providing a sustained supply of labor essential for scaling manufacturing and services sectors. This fundamental difference in human capital is a key differentiator. Recognizing this potential, India has launched aggressive initiatives to transform its manufacturing landscape. The Make in India campaign is central to this ambition, aiming to boost domestic production and attract foreign investment. The government's goal is to increase manufacturing's share of India's GDP to a significant 25% by 2025. This involves streamlining regulations, improving infrastructure, and creating a more favorable business environment. Early indicators suggest these efforts are beginning to yield tangible results, attracting global interest in India's industrial future. A critical component of the Make in India strategy is the suite of production-linked incentive, or PLI, schemes. These schemes offer financial incentives to companies investing in domestic manufacturing across various sectors, from electronics and pharmaceuticals to textiles and automobiles. The goal is to offset the cost disadvantages of manufacturing in India compared to established hubs. These incentives are designed to attract global players, encourage local value addition, and make India a competitive destination for high-volume production, directly challenging the dominance of existing manufacturing giants. Perhaps the most prominent validation of India's manufacturing potential comes from tech giant Apple. The company is actively diversifying its production footprint away from China, with India emerging as a key beneficiary. Apple aims to produce 25% of its global iPhone volume from India by 2025, a significant jump from approximately 7% today. Major suppliers like Foxconn, Pegatron, and Wistron are rapidly expanding their operations in India, driven by government incentives and a strategic need to de-risk global supply chains amidst geopolitical tensions. This move signals a profound vote of confidence. The impact of these manufacturing shifts is already visible in India's export figures. The country's mobile phone exports alone witnessed an astronomical rise, reaching $11.1 billion in the fiscal year 2022-23. This represents a nearly tenfold increase in just 5 years, demonstrating the rapid scaling capabilities of the sector. Beyond mobile phones, India is positioning itself to become a significant exporter of other electronic goods, aiming to integrate deeper into global value chains. This growth is a direct outcome of both policy support and increasing foreign direct investment into the sector. Beyond hardware, India's technological prowess is well established in the software and IT services sector, often dubbed the Silicon Valley of the East. Its vast pool of English-speaking, skilled engineers has made it a global hub for outsourcing, software development, and digital innovation. This existing foundation provides a significant advantage as India pivots towards advanced manufacturing and integrates digital technologies into its industrial processes. The synergy between its robust IT services and growing hardware capabilities creates a powerful ecosystem for future economic expansion. India has also pioneered a unique approach to digital transformation through its Digital Public Infrastructure, or DPI. Systems like Aadhaar, the world's largest biometric ID program, and the Unified Payments Interface, or UPI, have revolutionized access to services and financial transactions. These open, interoperable platforms have leapfrogged traditional infrastructure, bringing millions into the digital economy. This focus on public digital goods sets India apart, creating a foundation for rapid financial inclusion, entrepreneurship, and efficient governance, which in turn fuels further economic activity. The sheer scale of India's UPI system is staggering. In 2023, the platform processed an astounding 11.7 billion transactions, with a total value exceeding $2 trillion. This makes UPI one of the world's most successful real-time payment systems, far outstripping many developed nations in terms of digital transaction volume. Its ease of use, instant settlement, and interoperability have driven financial inclusion at an unprecedented pace. The success of UPI demonstrates India's capacity for mass adoption of advanced digital solutions, setting a precedent for future innovations across various sectors. Further testament to India's dynamic economic landscape is its burgeoning startup ecosystem. India is now home to over 100 unicorns, privately held startups valued at over $1 billion, making it one of the top countries globally for startup creation. This vibrant environment is fueled by a combination of a large domestic market, increasing digital penetration, and growing investor confidence. From fintech to e-commerce, and health tech to education, Indian startups are innovating at a rapid pace, attracting significant venture capital and creating new jobs, further solidifying India's position as an innovation hub. Investor confidence in India is clearly reflected in its surging foreign direct investment, or FDI, inflows. In the fiscal year 2022-23, India attracted approximately $71 billion in FDI, demonstrating global businesses' increasing appetite for participating in its growth story. This robust inflow of capital is crucial for funding infrastructure projects, expanding manufacturing capacities, and fueling technological advancements. Furthermore, India's foreign exchange reserves remain strong, holding over $600 billion, providing a stable economic buffer against global volatilities and signaling financial resilience to international investors. A major driver of renewed interest in India is the global imperative for supply chain diversification. Geopolitical tensions, particularly between the US and China, along with the disruptions exposed by the COVID-19 pandemic, have prompted multinational corporations to de-risk their reliance on a single manufacturing hub. India, with its vast market, democratic stability, and growing industrial base, presents a compelling alternative. This China Plus One strategy is steering significant investment and production capacity towards India, positioning it as a key node in the evolving global supply network. To support its economic ambitions, India is undergoing a massive infrastructure transformation. Significant investments are being channeled into developing and upgrading its transportation networks, including new highways, high-speed rail corridors, and modern port facilities. Improved logistics are crucial for reducing manufacturing costs and enhancing competitiveness, particularly for exports. While a substantial deficit still exists, the pace of infrastructure development has accelerated, demonstrating a clear commitment to building the physical backbone necessary for a modern industrial economy. Despite its demographic advantage, India faces significant challenges, particularly concerning its human capital. A pervasive skill gap exists, where a large portion of the workforce lacks the specialized training and technical skills required by modern industries. While India produces millions of graduates annually, the quality and industry relevance of education often fall short. Addressing this gap through vocational training, educational reforms, and industry-academia collaboration is paramount to fully capitalize on its young population and ensure sustained, high-quality job creation. Another enduring challenge for businesses in India is navigating its complex regulatory environment and bureaucratic hurdles. While reforms are underway, companies often cite difficulties with land acquisition, obtaining permits, and legal complexities. The ease of doing business remains an area needing continuous improvement to attract and retain large-scale foreign investment. Streamlining processes, enhancing transparency, and ensuring policy predictability are crucial steps for India to further cement its reputation as a globally competitive and attractive investment destination. Addressing income inequality and ensuring equitable job creation are also critical for India's long-term stability and growth. While the economy expands, the benefits must reach a broader segment of the population. A large informal sector still dominates, and formal job creation, particularly in manufacturing, needs to accelerate significantly to absorb the 12 million new entrants to the workforce annually. Failure to create sufficient, well-paying jobs could exacerbate social tensions and hinder consumer demand, thus impacting the overall growth trajectory. Inclusive growth remains a key policy objective. The central question remains, can India replace China as the world's factory? The scale of China's existing manufacturing base is immense, with an annual output valued at approximately $4 trillion. In comparison, India's manufacturing output stands at a much smaller $450 billion. To truly replicate China's role, India would require monumental investments across infrastructure, technology, and human capital. While India is making significant strides, it faces an uphill battle to match China's established scale, speed, and efficiency in a short timeframe. It's more of an evolution than an immediate replacement. Perhaps a more realistic outlook is that India will not directly replace China, but rather complement it as a critical component of global supply chains. Given its unique strengths, a young democratic workforce, a robust digital ecosystem, and a massive domestic market, India is forging its own distinct path. Its growth narrative is less about identical replication and more about strategic diversification and creating specialized niches. India can offer resilience and alternatives, rather than simply being a like-for-like substitute, carving out a significant and independent role in the global economy. India's journey to becoming a global economic powerhouse is undoubtedly complex, fraught with both immense opportunities and significant hurdles. Its demographic dividend, manufacturing push, and digital transformation lay a strong foundation. However, consistent policy reforms, sustained infrastructure development, and a steadfast commitment to human capital development will be paramount. As the global economic landscape continues to shift, India's trajectory will not only redefine its own future but also profoundly influence the balance of power and prosperity worldwide for decades to come. The world watches keenly.